Today's reports on manufacturing and home sales missed analysts' estimates, adding to concerns that we are headed for a double-dip recession, or at least more of a slowdown. Here to help us break down and make sense of today's numbers is senior U.S. economist for BNP Paribas, former Fed economist Julia Coronado. Good morning to you, Julia.
Good morning.
In China, the manufacturing activity came in less than economists expected. Same story here in the U.S. Is there still steam to a factory-led economic recovery?
Well, yes, I think that we don't want to overstate what happened in the numbers today. So typically when the economy settles from this initial burst of inventory-led growth into an expansion, you see these PMIs and ISMs fall into the low 50s. The number that we saw today on the ISM is still a number consistent with pretty strong manufacturing growth. So I would say that the manufacturing data really wasn't that far outside of expectations. It does say that the peak is behind us, but it's not a dire reading either in China or in the U.S. The home sales numbers are perhaps a little bit more worrisome.
Yeah, when you say the peak is behind us, is that another way of saying this is the best it's going to get?
Well, in terms of the inventory push and the boost that gave to the manufacturing sector, yes. Now the question is, do we rotate from that into other types of sectors leading the way? For example, do we continue to see private sector hiring, fueling consumer spending, feeding into the service sector? That's the key.
Well, that is the key. Today's initial claims not really helping add too much optimism before tomorrow's jobs figure, though. What are you forecasting?
Well, the headline is not going to be good. We are forecasting a negative 150 on non-farm payrolls. Most of that is driven by the census, which is we expect to fire 225,000 workers. We're looking for a modest pickup in private sector hiring from 41,000 in May to 75,000 in June. Not a great number, but still moving into hiring territory. And that should be money in consumers' pockets.
Why aren't we seeing more hiring? Is it just the fear that perhaps corporate profits, while good, they may not be enough to encourage a company to take on more people onto their payrolls? I mean, what's the apprehension here?
Well, yeah, I think, we had seen a string of very strong numbers earlier in the year, and then May was a bit of a disappointment. And now I think we are seeing increased caution on the part of businesses, particularly the globally facing corporations that have been doing so well. They are the most aware of the concerns that are reflected in market moves, and perhaps at the margin they will delay hiring and capital spending decisions, taking some of the steam out of the momentum we had seen building earlier in the year.
Now, you mentioned briefly pending home sales. The expectation is that they would decline, but a 30% month-over-month pullback shocked people.
It is a shocking number, and both pending home sales and new home sales have reached new lows. So that really means that most of the stabilization we saw last year was simply a pulling forward of demand. How much momentum we get from here is really a huge question for the outlook.
Huge question. Perhaps jobs tomorrow will answer that.
Hopefully,
in some
yes.
way.
That will tilt to balance, either adding to the concerns about growth or alleviating some of the fears.
All right. Thank you, Julia Coronado, joining us, senior economist there at BNP Paribas.